Good afternoon. Our webinar will start in 5 minutes. Welcome to our webinar, Reinventing the Electric Utility. This is the second installment in Skipping Stone's knowledge sharing series of webinars. I'm Nancy Young, a senior consultant and project manager with Skipping Stone. I'm playing moderator today for Ross Malmy since John Brown, who is also scheduled to speak today, has been called out of town. Ross is an owner, partner, and member of the Skipping Stone Board of Directors. Ross runs Skipping Stone's smart grid and international business practices. Today we'll be looking at how the advent of rooftop solar, energy storage, prosumers, mergers, and the resulting regulatory pressure have triggered business model changes and a shift in customer expectations, which in turn have effectively put electric utilities at a crossroads. Last month, we surveyed North American electric utility industry professionals to get their insights on how the industry is reinventing itself to be successful in this new environment. Today, we'll look at our findings and we'll share some of our own insights gained across 20 plus years in the energy industry. Ross will be discussing major drivers for change, future focus areas, the impact of renewables, and smart technologies, and some more things. First, I'd like to share a bit about Skipping Stone. For those of you who are new to our audience, we are an energy markets consulting and technology services firm. Our consultants are drawn exclusively from the energy industry, and all of our partners are former energy industry CEOs. We are global with offices in Atlanta, Boston, Houston, LA, Tokyo, and London. By staying ahead of the market with fresh ideas that cross multiple energy sectors, we can collaborate with clients to address market changes, explore opportunities, and help launch new products, services, and businesses. We have helped hundreds of clients with thousands of projects around the world. Now to our survey. As to demographics, we had 67 participants across 51 companies, almost half of which were IOUs. Municipals and co-ops made up the next largest groups. We had participants across the US and Canada, and the largest number of participants, almost a quarter of the whole, were in the Southeast. The Midwest and Northeast were next with 18% each. Ross, would you like to take over from here to discuss our findings?
Yes, Nancy, thank you very much. Welcome everybody to our webinar here. Hopefully I'll be able to get my screen up here. So we asked 10 questions of the survey group, and I'll run through each of those and then run through a brief summary of the kind of conclusions at the end. So the first question we asked was, in your opinion, do utilities need to change their current business model to be successful in the future? And I was a little surprised by the results with this, but 92% of the respondents think utilities do need to adapt their business model to ensure future success. And if you take a look at the slide below there, it's there's strongly agree and agree are very dominant there. There's a very small minority either disagree or don't have an opinion. The second question among the new business models, select all that you believe your utilities should pursue. The top ranking business model was energy storage, followed by renewables, solar and wind. The next tier were energy management services, efficiency projects, retrofits, energy management systems. A large percentage believe that non-regulated subsidiaries should be pursued, and probably not surprisingly, international business was ranked the lowest of the group. And then here's some other additional comments that we got back that were a more one or two off, so to speak. One was adopting micro and mini grids, unregulated subsidiaries owned jointly by other utilities, which implies joint ventures kind of things. In California, they're looking at trying to get some relaxation of the affiliate transaction rules. There's a lot of variation among utility markets between the PUDs and IOUs too. So what you find is a business model that works for one utility may or may not work for another. A lot of these are viable options, and there isn't really a one right answer. Question 3, and this is where we sort of diverge the group. We asked specifically, is your utility changing its overall business model? Most of the participants said yes. And you'll see here that a majority of those said the changes are underway now. And then you'll see there's another group that's planning in the next year or two or the next 3 to 5 years. And about 30% have either no plans to change or they don't know. So the 4A question was of the utilities that said yes, they're looking at changing the business model. What are the factors that are influencing that change? The topping of the list was increased customer deployment of renewables or DERs. Resilience was following that, as well as rising fixed costs. And then close behind that were regulatory pressure, changing fuel mix, and profitability pressure. So there's a pretty good spread of the drivers that are influencing that potential change. Some other factors that we saw in the survey: aging infrastructure, aging workforce, regulatory pressure, responding to choice, reducing greenhouse gases, changing customer expectations, and emerging technologies. On the other hand, of the group that said they were not planning any changes to their business model, what are the factors that are driving the no change? Then a good portion of those came back and said that they attributed this to senior management not knowing what to do or not wanting to change. So kind of maybe stuck in the middle. A good portion of those also attributed this to regulatory support for the status quo. And then finally, there was a group that cited shareholders not wanting to change or a lack of capital to invest in those business models. So question 5, we asked them what products and services they were planning to offer. Here, the top 5 you'll see here: energy efficiency, audits, solar PV, DER deployment, and smart thermostats. That's followed by combined heat and power, energy services, meter data management, presentation and leveraging. So maybe utilities entering the data management business, and so forth. Question 6, what do you think are the drivers for a new business model? Resilience and recovery were the top of mind for most of the participants, followed by profitability and investor ROI at 20%. The next group, mid-tier, comprised retail commodity rate structures, utility performance incentives, and JD Power customer satisfaction rankings. All got 11% as well. And here are some other drivers that weren't in the majority, but there's others that responded with this. Tech-enabled competitive pressure from incumbents and new entrants, competition at the distribution level, managing customer expectations. I've heard this one before: making enough money to survive. I know there's a few PUDs or co-ops in the southeast here that are struggling a little bit with the flat or declining load curves. Unsustainability of the existing model, and then other entities offering what customers want, new competition, changing load shape, and so forth. Question 7, how are smart cities affecting your future business model? This one, I wasn't sure what kind of response we'd get to this. I knew there were some utilities that were really looking at the integration of smart grid and smart cities, and indeed we got some of that. If you take a look at it's a big opportunity for economic development here, a way to leverage our AMI network, and you know there's some utilities that are looking at integrating smart LED street lights with their AMI networks and actually improving their performance. And followed by a big part of our smart grid communication network planning. And then there was a group that either didn't understand it or didn't see that smart cities were going to be affecting their business model. And I think this is typical. You're seeing some early adopters in the industry here, and some folks that are waiting to see what happens before they want to make any kind of move. Also think you'll see here that this is kind of pocketed. You'll see if we got inside the data here, you'll see that there's certain pockets that are moving forward with some of these initiatives, and some that are lagging behind. Another question we ask is about community choice aggregation affecting utility business. Over half felt that CCA had little or no impact, and a good portion didn't know what CCA really was. So I think this is also, you'll find that if you get inside the data here, this is more on a regional basis. You'll see, I think some of the California utilities are having a much greater impact, and some of the areas that have retail customer choice are feeling community choice aggregation definitely affecting their business. But if retail choice isn't a big deal yet, probably not as much of an impact. Question 9, we asked about beneficial electrification, replacing fossil fuel use of electricity to reduce emissions and costs. Not surprisingly to me anyway, leading the category were DER and EV charging. That's sort of top of mind. Electric water heaters as a storage medium came in third. I think you'll see also that this is more on a regional basis. It turns out there's about 50 million electric water heaters in the country, with about 8 million new water heaters sold, residential water heaters sold every year, about half gas and half electric. And I would expect this one to start bubbling up to the top. And then about 16% really felt that beneficial electrification was not a big deal, or didn't have an opinion. Other responses we got back here, one was meeting the CO2 reduction goals in 1990 levels, transition to a low carbon economy. One response is an opportunity to do the right thing and be a hero, and then significant impact in the future, but not yet. Then final question we asked is, do you think the declining cost of renewables and storage will affect your generation mix in the future? If so, how? Clearly, fuel diversity was a leader in this category, followed by an opportunity to explore new business models. Some see fossil fuel power becoming a stranded cost in the future, probably with the continued low cost of natural gas-fired generation and the rapidly declining cost of some renewables like solar as well. So a couple of key observations that we saw out of this. Again, pretty surprising that there was over 90% agreed utilities need to adapt their business model to ensure their future success. Top focus areas: batteries, storage, renewable development, energy management, and then followed by energy management systems, creating a non-reg subsidiary that can do business within the territory, and also forming non-reg sub focused outside the utility. Some of the factors influencing the changing business model, it varied quite a bit, but The leader was customer deployment of renewables and DER, 20%, and then there's several that were clustered in the 10-11% range. Investing in resilience, rising fixed cost, declining customer demand, regulatory pressure, profitability pressures, and changing fuel mix. The second set of observations here, beneficial electrification. 60% believe that DER and EV are key to this. Again, with water heaters coming in distant third, and a minority had no opinion, didn't think it was a big deal. The declining cost of renewables and energy storage. 43% believe that fuel diversity is always going to be the key, and 31% saw this as an opportunity to explore new business models. What I want to point out here is we will send out a copy of these slides, or at least a link to a copy of these slides. And if there's any questions at the end here that we don't get to, we will also include that, so you can look to be getting an email from us that will have the slides and the backup. And if you're interested in kind of the detail behind some of this, feel free to reach out to me, and we can get into this a little bit deeper in terms of how the segmentation works. What I'd like to do now is go through a couple of case studies, work that we've done with utilities that are changing business models. These are just kind of generic examples of situations and outcomes. There's actually four I'm going to go through. The first one on the left here, it's a large investor-owned utility. It's forming and funding a new non-regulated subsidiary. They wanted to diversify and create new revenue streams and profits outside its territory by forming a new non-regulated business. Our engagement was really to assess their strategic plan, to look at the viable markets, look at growth trends. We developed an implementation roadmap for them. We went ahead and profiled approximately 60 target company acquisitions that fit with their strategy, financial criteria, focus, and market segmentation. And developed a scorecard to rank the targets, and then we made the introduction and introduced and facilitated the deal flow. Results out of that, there were 3 M&A transactions closed in the first 12 months. Clients on target to make their revenue projections, and they now have a platform in place to grow organically via additional targeted acquisitions. The second one was, again, a large IOU looking for business models for the future. They're really looking at emerging technologies and to some extent. So we helped them create an innovation program for the purpose of finding and investing in new business models, and also really helping them change the internal culture around innovation. So our engagement, we created a framework and implementation plan to open and launch the Open Innovation Program. We collaborated with the leadership to develop the criteria for investment models and focus areas. A plethora of tools, templates, training materials for training employees, and we facilitated and helped drive the market research, identifying their early stage new businesses, and provided introduction again to over 80 companies fitting the program profile. Results: the clients actually invested in 5 companies, and now they've taken this whole project internally. We've turned over everything back for them, and they're driving it on a self-sufficient basis. Couple of others that I'll touch on real quickly. The one on the left, a large IOU, non-reg subsidiary with diversified holdings. They're looking at a variety of acquisitions on markets outside its service territory, and they're really having issues related to performance. It's in terms of sales and not marketing hitting projections. So our engagement, we reviewed their existing product and service offerings to streamlining for the go-to-market strategy, analyze their current marketing and sales methodology and staffing, revamp that, and a new streamlined model. Again, tools, templates, and training for employees. We provided outsourced services to them to augment their team for business development. And the results: client has increased its sales pipeline to meet its metrics, and dramatic improvement in the quality of the opportunities. Final one I'll touch on here is a IOU, a non-reg subsidiary seeking to expand into a new territory. They had existing market share in eastern utility markets and wanted to grow by expanding out west. Our engagement, we researched the markets to create a target list of potential markets to expand into, developed the business plan, perform investment criteria, actually went out and surveyed customer targets to validate the interest in the offer and the buy cycle. We provided the launch team in the new market on an outsourced basis and developed a new channel program. This client has successfully entered the California market. They're on target with revenue and profits, and then they have now transitioned our outsourced launch team internally after the first year of operation successfully. So with that, Nancy, I'll turn this back to you and to see what kind of questions we may have.
Okay, let's see. Hold on just a sec. There's a chat function in the there in the bottom, in case people haven't seen it yet. Some have, but if they have any questions, they need to go ahead and you guys can type that in right down there. Ross, one of the questions I have so far is, if a utility is interested in reinventing their business model, where do they start? What questions should they ask?
Well, Nancy, that's a really good question, and I guess what I'd start with is the reinvention really needs a champion at the executive level, and so in a large IOU, this probably is the corporate planning or the business development or the CEO. We saw some survey responses along the lines of executive management doesn't know what to do. The challenge that we see when we run into this with utility executives is a lack of time or a process to focus on the reinvention, which is the reason we think people responded to that question the way they did. I think the first question for the company leadership to ask is, does it see its current business model at risk or not? And if so, who's going to be focused on this area? It can't be just another job. There isn't really any right answer on how to reinvent a utility. Each utility is unique. We typically start our process with a workshop style session where we explore the strengths, weaknesses, barriers, and take a look at the ideas that they already have or are either interested in and rejected. And we put forth a variety of potential business models to kind of gauge interest, which helps to kind of narrow down the focus of the future utility activity.
Okay, thanks. Let's see. Which stakeholders need to be involved in that process?
Well, stakeholder involvement is really key to this, and it really needs to include all the stakeholders, and that includes the board of directors, management, shareholders, employees, customers, the regulator. But the board and the core executive team really need to get on the same page and craft a message for the broader stakeholder group. Once that initial strategy is agreed, then the team lays out the stakeholder involvement process. The various roles will differ based upon the company structure. It's an IOU, a cooperative, a muni, and the key here, I think, is getting the board and the senior management on the same page with where they're going, testing that idea, and then engaging the other stakeholders as appropriate, including the regulator.
Okay. Here's someone whose utility is already pursuing alternative business models, but they don't seem to be gaining enough traction to move the needle on the stock value. Do you have any suggestions?
Well, it all kind of depends on each utility situations and goals and while they're at it in the process. It would be difficult to advise you on your situation without knowing a lot more. But here's maybe some common themes that we've seen in play. A lot of times we see what I'd call toe dipping in the water, which means making small bets into new business and models, and that's okay. And we've done a lot of work in what we call innovation programs of utilities. As long as the expectations are in line, small bets are a good way to gauge what will or won't work before taking on, a bigger program. These innovation programs aren't meant to move the needle today. They're really designed to sort out where to go in the future. If the utility is in a situation where it has an unregulated sub, and that business the situation is that business isn't achieving those results that needs to move the needle, that's a very different situation. Again, difficult to provide anything specific, but high level thoughts. But maybe if you want to contact us offline, we can probably have a discussion around that. If it's a strategy problem, or if it's a process problem, if it's an offer problem, or if it's a personnel problem.
Okay. Are there any rules of the road you would suggest a utility adopt if they're thinking about doing this?
A key driver for this process is to enable a team of people within the utility to really focus on this, not make it a committee that meets every week or two, and where progress is going to be slow because everyday jobs take precedence. You need to have a dedicated team. It doesn't have to be a very big team. 3 people could probably handle this. It can't be one. That doesn't work very well. Another rule of the road that I see is start by focusing internally on strengths and weaknesses, and perhaps even survey your executives and the board to develop an understanding of the boundaries, so the team doesn't waste time focusing on new models that the CEO and the board will never approve. I've seen this before too, where you've got a team that's off, innovating, and comes up with what they think is a set of really good ideas, but it really hasn't socialized this with the CEO and the board, so the CEO and the board really need to put some kind of guidelines or expectations in line for the team that's working on this.
Okay, another question that comes out of that, I guess, is one that says, are there any third rail type issues that the utility just has to avoid?
Well, that's a pretty interesting question. From my standpoint, the one thing that is usually pretty sensitive is, how does the utility engage with the regulator? It used to be that utilities were very guarded with the relationships with regulators, and so they could focus on rate cases and so forth. But in this day and age, with these changing business models, engaging the regulator in the thought leadership without having official filing in front of them is probably a pretty valuable process, at least initially, so you can gauge their views on what's inbounds and what's sort of out of bounds. Also, I think that the broader stakeholder group in terms of beyond regulators, also legislators, congressmen, senators, to kind of gauge what are their thoughts on this, and what would they support. Don't mistake this as being lobbying. It's very different. You're really in an exploratory mode, not an advocacy mode here. So that's really what I try to do there, is making sure you're gaining some input in a sort of non-threatening way, and that they're part of the process and can buy in.
Okay. And one last question: how important is it to create a non-regulated entity?
Well, I'd say one aspect of this is, utilities are in the distribution business, and they can't just walk away from that tomorrow. I mean, they've got to stay focused on that. They've got a responsibility for reliable, resilient, and a cost-effective service to ratepayers. There's a lot of complex aspects to the evolution of a business. I'll say that setting up an unregulated entity allows you to start reinventing the business while you sort out some of the other pieces. That said, the actual strategy and the go-forward plan should be made holistically. So I'd say, if you're serious about this, and you think that this is best pursued in a non-regulated fashion, going through the process of setting up a non-regulated affiliate is probably a pretty good idea.
Okay, looks like we've come to the end of the questions. And thank you for all of that insight, Ross. I'm sure it's been really helpful. We will have this webinar available on our website, on our webinar page. All the webinars that we've done are available there. This one will be up there shortly since it's being recorded. And we really appreciate everybody joining us. There will also be, as Ross mentioned, we'll be sending out a link to the presentation that you just viewed. And if you're interested actually, there will be contact information from all of us so that you'll be able to get back in touch with us. So we appreciate your being here today. Thank you very much. And Ross, if there's...
Thank you very much, Nancy, for a great job moderating. And we really enjoyed this project, and we gained a lot of knowledge out of this, and look forward to engaging with the folks in the audience here.
Thank you.